Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. President Trump has set off for China for the first U.S. presidential visit in almost a decade. He faces an emboldened Xi Jinping as the Iran war clips American leverage. Traders renew bearish bets on U.S. Treasuries. Expectations grow that the Fed will raise interest rates as oil and inflation push higher. And crude shipments from Iran's main export terminal appear to have stopped as Bloomberg learns the UAE is said to have hit the country earlier in the war. It's just gone 8 a.m. across the Emirates. I'm Presight in Dubai. Well, the ceasefire is still holding up in this part of the world, but at the same time, the focus is very much going to be on that Trump-Xi summit that's taking place in the coming days. We understand that President Trump is on his way there. He should be landing around 7:45, 8 a.m. Eastern time, which is evening Beijing time. So we'll expect more fireworks in the next coming days, and we're going to give you a preview throughout the show on what to expect. And certainly the markets are on tenterhooks to see whether there can be any economic breakthroughs, and even on the diplomatic front as well, whether China can exercise a bit of leverage on Iran. So all being watched out for the next couple of days. As for markets, S&P futures leaning towards the green. Yesterday, we had much hotter than expected inflation data. The biggest jump in the last 3 years, a CPI headline rising at 3.8%. No surprise, the catalyst is coming from higher energy costs. We speak about the price of oil, the fact that we have jumped so much this year. Brent this morning sitting in around $106. But I also want to point out, and this is something that sort of tallies up with the chart that I was showing earlier in the week, real wages have started to drop, i.e., nominal wages are not rising as fast as inflation. And why is that an issue? Because it's hitting consumer sentiment and consumers' perception about the state of the U.S. economy. That is why the sequencing is important here. Higher inflation, higher gasoline prices, lower real wages, it's all going to hit consumer sentiment as we think about those midterms later in the year. 10-year yields also moving higher, 4.46. We have covered 10 basis points in the last couple of days. Again, an inflation story, but not just in the U.S. Of course, one of the other big catalysts is the U.K. I'll get to U.K. gilts in just a moment. But interestingly enough, not sure here why it switched around, but pound hasn't done a whole lot versus the USD. Which tells you that, at least as far as the currency is concerned, somewhat being a bit immune to some of the political pressure that's being piled on the UK Prime Minister now. And actually, the markets there are focusing more on perhaps the Bank of England's hiking outlook as opposed to public finances. So let's switch over. And you will see very clearly from this chart that UK gilts have massively underperformed all other fixed income markets. So yes, there is an inflation story. But what this chart is telling you, and this is the 30-year UK yield, going back to the beginning of the year, we're up 56 basis points. We have massively underperformed, and that is because markets are accounting for perhaps a leadership change, a replacement of Keir Starmer with somebody from the harder left, with more perhaps market-unfriendly proposals. And there is a risk here of further fiscal slippage. So that is being priced into the UK long end, and not just 30-year, but 10-year as well. Over the last couple of days, UK 10-year gilts have moved up 15 basis points. So a big focus for markets. But let's go back to Asian markets now. Avril Hong is standing by for us in Singapore. Avril, what are you watching out for today?
Yeah, we were expecting a bit of a down day, midweek session, right? Given how the US CPI print prompted the sell-off in the Wall Street stocks, the chips, that was where the drag really was. But take a look at what you're seeing today. Of course, on the Kospi yesterday, we were talking about that citizen dividend and how that was later clarified as not being a windfall tax. The idea of Jensen Huang, as we've learned, being in China for this trip along with the US president has really lifted the mood in equities at least, and we're seeing that reversal today. The Kospi was 3% down at one point. The stock of Samsung was down about 6%. You're still seeing that green thanks to that lifting of the mood from Jensen Huang being in the region. I would say, though, that for the likes of Samsung, you're still seeing that underperformance versus SK Hynix, and this has to do with the labor union woes that the chip company is facing that's raising some concerns about supply disruptions for memory chips. But overall, you are seeing a bit of a better day for the moment. Joanna?
Avril, thank you so much. I've got to say, Kospi has to be one of the most volatile indices out there based on the day-to-day performance. All right, President Trump is on his way to Beijing for his highly anticipated meeting with Chinese leader Xi Jinping. He'll arrive facing an emboldened Xi, just as his own hand is constrained by the conflict in Iran. Let's go live to Beijing and our chief North Asia correspondent, Stephen Engel, who is very much in China, as you can see from the background there. Stephen, how big are hopes of some form of either a diplomatic breakthrough or an economic breakthrough? And the fact that President Trump is going all the way to China signals that there must be something on the table to look forward to in terms of an agreement.
Sure. I think the expectations have vacillated quite a bit in the last few days. Leading up to this, the speculation was really that the war in the Middle East and Iran was going to overshadow just about everything. And you think about it, what would be the hypothetical deliverables for the White House if indeed China sort of stands its ground and demands that the war end, or the blockade in the Strait of Hormuz ends, and all of a sudden they dominate their very short time together, really only about 36 hours from the time that they have their first meeting in the Great Hall of the People just down the moat here from the northeast corner of the Forbidden City, until they have that Friday lunch and he gets on the plane early afternoon and heads back Friday to Washington, D.C. There's not a lot of time, and if they spend it all on Iran, they might not get the deliverables both sides kind of want. And that list of U.S. executives that's on the plane and also will be meeting the U.S. entourage here later tonight really tells the story. Jensen Huang now being added to that Air Force One itinerary. That really opens up a lot of speculation as to whether, indeed, the most advanced AI accelerators from NVIDIA could be a part of the negotiation. Maybe it's already a done deal.
Yeah.
The CEO of Micron also going to be here. The CEO of Qualcomm going to be here. A lot of big names, including Kelly Ortberg of Boeing. A Boeing deal is expected to be announced.
Yeah, it's interesting that when it was confirmed that Jensen Huang was flying to China, you actually saw a pop in NVIDIA share prices and after-hours trading. So certainly some optimism around what we can expect on those chip sales. Stephen, this is also the first time the two leaders are going to be meeting since the tariff showdown of 2025. And I just wonder whether China's hand has been strengthened from that, and that they've identified that they have a key point of economic leverage, which is their hold over critical resources, over those rare earth minerals.
Absolutely, they've gained confidence and they've gained leverage. Throughout the tariff barrage from Washington last year, China, by most accounts, weathered that pretty well. In fact, took over some of the levers and put it back onto the United States, in particular in rare earths. You mentioned it. In the industry, they call them the golden screws, if you will, rare earths, the batteries that are needed for the global manufacturing sector. China has the lion's share of those critical minerals, and they found great leverage. And also, if you look at the energy space as well, China has been spending the last couple of decades investing heavily in renewables. So they've diversified and, put resilience into their energy mix. Sure, a lot of their power generation is still from coal. They still are the world's biggest importer of crude. But they have diversified to wind, solar, hydro, nuclear, and the like. So Xi Jinping can also stand up there with Donald Trump and essentially feel confident, fairly confident. I mean, keep in mind, they don't want the war to go that much longer in the Middle East, but they can stand fairly confident that they are resilient. But really, it's that lever on the tech front, on the rare earths, that does give China a lot more bargaining power, if you will. That's why I think the mix of U.S. executives who are willing to make the long trip over here for a very short amount of time, FaceTime with Xi Jinping, could be telling indeed. It's speculative right now, but there could be tech deals. There could be soybeans. Kharg is coming here, and Boeing, again, the CEO of Boeing.
Yeah, some of the biggest CEOs in the world flying over for a 36-hour trip. That does tell you a lot. Chief North Asia correspondent Stephen Engel in Beijing. Thank you. Well, satellite images show oil shipments from Iran's main export terminal appear to have come to a standstill over the past several days. Kharg Island remaining idle would increase the pressure on the country's remaining storage facilities. Bloomberg has also learned the UAE has retaliated against Iranian attacks on its territory earlier in the war. Sources say one of those was an Israeli-coordinated response to an Iranian strike on the UAE's Barouj petrochemicals facility last month. To unpack the latest, Stuart Livingston-Wallace, Bloomberg's executive editor for Middle East, North Africa and Russia. Stuart, lots to talk about here. I actually want to start with the story of the next couple of days, which is this Trump-Xi summit that's taking place. How much are we expecting Iran to feature there?
Yeah, I mean, the US, I think, is downplaying, and they're saying it's going to be more about trade. I think the reality is it has to feature. You cannot separate the Iran war from trade or from anything else right now that's having a global impact. What will be interesting is China's response. You know, at the moment or to date, it's been a little bit in the shadows, I would say. It's not really engaged too much with it. And it has a really difficult balancing act because here's the reality. Yes, it's very dependent on Iran for its oil imports, amongst other things. But if you look at the trade numbers, it's way more important in terms of the other side of the Persian Gulf and the Arab states. So it's got a difficult balancing act here where it clearly wants peace, but at the same time, it's got to try and sort of stay friendly with both sides. So we'll see.
Yeah, economic stability always top of mind for China. There have been reports, a few reports that have emerged the last couple of days indicating that the UAE has retaliated against Iran. Our own colleagues put out an article yesterday as well. What do we know about UAE's participation militarily in this war?
So I think it sort of underlines two things. One is sort of a theme that's been going through this and, you know, that we've seen since the beginning, which is that the UAE is phenomenally well equipped when it comes to its military. And we've seen that on the defensive side, right? I mean, we've had 2,500, 3,000 missiles and drones thrown at the country. It's intercepted the vast majority of them, you know, and we've seen that with our own eyes. So I think this adds another leg and just underlines this fact that the UAE has a very significant military force. It's well disciplined. We know it's incredibly well equipped. And as the leadership has repeatedly said, you know, don't mistake the prosperity that you see around you for a country that has an inability to defend itself. Clearly it does.
Yeah.
And it's willing to do that on all fronts.
Yeah, as evidenced by reporting. Another interesting story up on the terminal by our energy colleagues. Kharg Island, the loadings onto tankers seem to have completely petered out in the last couple of days, based on satellite imagery. Does that suggest maybe that the U.S. naval blockade is actually working insofar as it's cutting off Iran's ability to export its oil? Yeah,
possibly. It's based on a few days of satellite images, you know, and I give a shout out to Julian Lee, who's done the work on this.
Yeah.
There's some phenomenal work. Looking at the satellite imagery from Kharg Island, we've had no tankers loading for 3 days. That's certainly unprecedented since the conflict began. At the same time, he's looked at the storage tanks and the shadows they're casting on Kharg Island itself. Again, incredible work, which suggests that they're probably starting to fill up. So those two combined certainly suggest, and again, this is based just on the images we can see, that potentially they are running out of storage space, they're running out of tankers to put oil on. We'll see over the next couple of weeks whether that trend persists. But yes, that is the implication.
But it is relevant in the context of how this impasse might be broken, especially if Iran starts to feel the heat there. Stuart, thank you so much. Stuart Livingston-Wallace, Bloomberg's executive editor for Middle East, North Africa and Russia. Well, up next, Chief Economist and head of OCBC's Group Research, Selena Ling, unpacks the divergence between financial markets and the real economy. More details next. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Asian stocks erased earlier declines after dip buyers stepped in following early weakness in chip makers. This comes after U.S. inflation accelerated, fueling speculation the Federal Reserve will raise interest rates next year. Joining us is Chief Economist and head of OCBC's Group Research, Selena Ling. Well, I'm going to start with the upcoming summit between Presidents Trump and Xi Jinping. And I'm curious to hear from your perspective what you think China want to get out of this bilateral.
Well, there's a lot of focus on what will happen on the Iran front, in terms of China's influence. But actually, I think it comes down to the treaties. It's really very much about trade, about tariffs, and of course, Taiwan as well. So I think as far as, Chinese purchases of U.S. goods, whether it's agriculture, energy, or aircraft, I think that's low-lying fruits. But I think the whole issue about whether we will get a further extension of the trade truce, whether tariffs are headed higher or lower or just stagnant from here, I think we'll be very interested to see what both leaders have to say on that front. US President Trump has already said that he's looking for an opening up on China. How exactly that will materialize also, it will be very interesting to watch. I think going forward, it's really very much setting the stage. We may not get that much concrete details at the first instance from this meeting itself.
Yeah. How much have the existing tariffs actually affected the Chinese economy? And I know there was, this showdown in 2025, and then they settled on that trade truce, but still at a very high level of tariffs. How much of an impact has that actually had?
Actually, surprisingly less than expected, because if you look at the first quarter GDP number for China, it came in better than expected. And actually, net exports have been making a positive contribution to overall GDP growth for the last few quarters. So it does suggest that, the worst did not materialize. And there is probably some burden sharing that's happening between the Chinese exporters and the US importers, and of course, the US end consumers themselves. Of course, how long the situation could last, given that oil prices are now exerting upward pressure on, end consumer prices, that we have to wait and see. But, the overnight US core consumer prices did give a warning signal as to where prices are headed in the coming months as well.
Selena, for the better part of the last year or so, we've been talking about the authorities' battle against deflation in the Chinese economy with these negative numbers, overcapacity. One of the byproducts of the war is rising inflation levels, not just in China, but around the world as well. And you're seeing it in the PPI and Chinese PPI. How would the authorities actually be reading this? Is it actually a welcome byproduct of the war?
Well, I think as far as the reflationary signal is concerned, it should be welcome. But I think it would be also, warrant some monitoring, because we are seeing this opening gap between the CPI and the PPI now in China. PPI is rising a lot faster than the CPI itself. That tells you that a lot of the pressures are coming in on the supply side. But on the demand side, consumption and consumer appetite still remains quite modest. I think that's a reflection, of course, for the overall labor market condition and also the property market slump. So if the producers are absorbing the bulk of the supply side cost pressures, but are unable to pass it on to the end consumers in China itself, then it could also mean that, there'll be a further squeeze on margins for the manufacturers and the producers. So I think at some point, if the cost pressures get intense enough, they may actually warrant passing on some of the costs. But, given that the weakness that we are seeing in the consumption story in China, that will be interesting to watch, I think, in the coming months if the Iran war and the energy prices do not resolve.
Okay, yeah, interesting. I want to ask you about the Chinese yuan as well, because we have been on a winning streak now for over 10 weeks, actually, coincidentally, since the Iran war started. How should we read that? And, could you say that it is perhaps somewhat of an olive branch that China are putting forward to the U.S. In anticipation of this meeting that is taking place between the two presidents?
Well, I think it's probably a mixture of factors. China has been relatively resilient. Like I said, first quarter growth surprised on the upside. And even if we see a growth slowdown in the coming quarters, I think overall we still should be able to meet the official growth forecast of 4.5 to 5%. There is a bit of that economic resilience story that's happening. But on top of that, we have seen the upbeat sentiments, especially going into this Trump-Xi meeting. Whether you call it an olive branch or not, I think generally it does send a relatively positive signal, I think, to the US administration that, basically, given the whole geopolitical tensions and the very fragmented supply chain story, China is basically not using currency to basically export its way out from this conundrum. So I think it could be a nice gesture, but I think in the overall scheme of things, China does seem to be coming out and faring relatively better compared to some of its Asian neighbors in this high energy situation.
Selena, thank you so much. Selena Ling, Chief Economist and Head of OCBC's Group Research. Well, still ahead, General Atlantic is deepening its ties with the Middle East. My exclusive conversation with CEO Bill Ford is coming up later this hour. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johanna Bersetchi in Dubai. JP Morgan CEO Jamie Dimon has told Bloomberg he thinks investors are over-exuberant and markets at record levels do not reflect current risks. He labeled the Middle East conflict a, quote, big deal and warned it is getting worse every day.
I think there's a little bit too much exuberance out there. It's not just the Middle East. It's, it's Ukraine, Russia still there, America, China. There are a lot of these complex issues which may or may not affect the market, but then there are issues like inflation, that today's print wasn't so good. So yeah, I think the market's kind of exuberant and it may not be completely justified.
Bloomberg has learned that Google is in talks with SpaceX regarding future launches for an orbital data center project. Google has previously said it's been planning for prototype solar-powered satellites to test how machine learning works in space. It also said it was exploring deals with other launch providers. Sources tell Bloomberg that Anthropic is in early talks to raise at least $30 billion in fresh funding, potentially valuing the company at more than $900 billion. The push comes as it races to secure enough deals to pay for its computing infrastructure and meet growing demand for its products. The round is expected to close as soon as the end of this month, though terms are not finalized. And let's take a look at how equity markets are faring. And what we're seeing is a little bit of green on the board. S&P futures up 0.1%, the Nasdaq up 0.4%. Yesterday, the focus for markets that hotter than expected inflation data coming through, pushing headline inflation to the highest level in 3 years, 2022. And then it also pushed up yields as well. So we've seen a massive move up, not just in U.S. Treasury yields, but of course in the U.K. as well, with gilts there coming under selling pressure. And as you can see, 10-year yields now 4.46%, a lot of that on back of the inflationary outlook. And I would say some of the tailwinds or headwinds coming through from other global fixed income markets, including the UK market and JGBs. So that's your picture for fixed income. Now, speaking of the UK, the Prime Minister there, Keir Starmer, clings on to power. But as his rivals circle, how long will he remain in the top job? We discuss the political crisis next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa, our top stories this morning. President Trump has set off for China for the first U.S. presidential visit in almost a decade. He faces an emboldened Xi Jinping as the Iran war clips American leverage. Traders renew bearish bets on U.S. Treasuries. Expectations grow that the Fed will raise interest rates as oil and inflation push higher. And crude shipments from Iran's main export terminal appear to have stopped as Bloomberg learns the UAE is said to have hit the country earlier in the war. Well, it's just gone 8:30 a.m. across the Emirates. I'm Johanna Bersetchi in Dubai. Let's check in now on how markets have been faring with this slew of news and that upcoming Trump-Xi summit. Abir Abu Hamad is here for us.
Good morning, Johanna. Well, look, U.S. futures are swinging to the green this morning. They were in negative territory earlier, and this is similar to what we've seen in the S&P 500. Yesterday, it closed in negative territory after rallies that led to multiple record closes. Now, multiple stories there. We saw that CPI report coming in yesterday, 3.8% on an annual rate. That is the highest since 2023. But also core CPI in the United States came in higher than multiple estimates. But also there are some stories within the wider gauge, and that is the run-up that we've seen in chip makers that's brought up these questions about valuations yet again. So the AI story returns. We saw the likes of Qualcomm, AMD declining significantly yesterday, leading to that negative close. Now, when it comes to Asian equities, they're 0.4% higher this morning. And this is after news broke about NVIDIA CEO Jensen Huang being one of those CEOs that is visiting China with President Trump today. So that is leading to an upside in Asian equities, also led by South Korea's Kospi that is gaining over 2% at this point. Brent crude in focus for the past 75 days or so is declining today 1.2% lower, 106, a little bit above $106 a barrel, as this sense of plateau when it comes to the war in the Middle East really settles in. So we wait and see what kind of conversations President Trump has with Xi Jinping when it comes to the conflict in the Middle East. The story about the 10-year yields in the United States is also similar to what we're seeing across equities. Those inflationary risks that are coming across from the U.S. were weighing on the 10-year yields, the 2-year yields, but also the 30-year yields. Not doing much this morning at 4.5% in the 10-year notes, but something to keep an eye on, Jumana.
Abir, thank you so much. Abir Abu Hamad here for us in Dubai. Well, UK Prime Minister Keir Starmer has managed to cling on to his post. That is despite a slew of ministerial resignations and calls for him to stand down from some 90 Labour MPs. The turmoil within the ruling Labour Party has also roiled the UK bond market, with gilts falling across the board and the 30-year yield briefly hitting a 1998 high of 5.81%. All of this comes as King Charles prepares to deliver a speech today outlining the government's legislative program for the next year. For more, we are joined by Bloomberg's Rosalind Matheson. Ross, well, 90 lawmakers are calling for Starmer to step down. You had 4 cabinet ministers resign yesterday. I guess the question is, how long can he hold on for, or indeed, can he actually stay on as Prime Minister?
Well, certainly he seems to be trying to dig in. He's throwing down the gauntlet, saying, if you want to challenge me, you've got to come and identify yourself and do so publicly. And he's really trying to mount that challenge. But behind the scenes, the conversation is very tricky. A lot of Labor members saying it's building to something. Keir Starmer is too weak right now. He cannot be the leader potentially to lead us into a next election. And that election is some years away. And the feeling is you need to change leaders now to give that replacement some time to rebuild popularity with the general public. And so the sense is it's coming to a head either way. What are we looking for? Potentially cabinet ministers to resign. So far, it's been lower level junior ministers who have gone. Perhaps something from the Health Secretary, Wes Streeting, who is seen as a potential contender. He's been very quiet so far, but we know he's meeting with Starmer today and what comes out of that conversation. And also keeping an eye on another contender who's the Greater Manchester Mayor, Andy Burnham. Yeah, who technically does not have a seat in Parliament. So there's a technical issue there. Roz, in the introduction to you, I was talking about 30-year gilts being at the highest level since 1998. What do you think is worrying investors the most here? Well, certainly you're seeing that market concern, as you say, long-end gilt yields at decade-long highs. And really that's going to push up costs for households as well in terms of their own interest payments. But the concern, and we've seen this again and again in the UK market, is that are you going to get a shift in leadership to someone who's willing to spend more and very much to borrow more, to push up borrowing and borrowing costs with it in the UK. And memories still going back to that disastrous mini budget of then UK Prime Minister Liz Truss back in 2022. And the market's been very sensitive to this issue ever since. And they're obviously looking at the landscape and saying, if Starmer were to go, are you going to get a shift towards a replacement who might be willing to unloosen those taps a bit on the fiscal side? And again, markets are really sharing that concern right now. Oddly enough, does that cause a reverse effect where Labor looks at it and says, hang on, we can't risk a market meltdown here, so we need to hold off? Yeah, I guess a lot of parallels with that Liz Truss moment. Rosalind Matheson, thank you so much. And of course, today we're waiting out for the King's speech too. Now, General Atlantic is deepening its ties with the Middle East after securing a $500 million commitment from Qatar's sovereign wealth fund, QIA. In an interview, CEO Bill Ford tells me that investors in the region remain focused on long-term growth, even amid geopolitical uncertainty.
We have a great relationship with QIA, as we do with other capital partners in the region, but QIA, I think, is very focused on growth investing. They see the opportunity investing in innovation around the world. We've partnered with them on many deals and many opportunities, and this was a great opportunity to sort of deepen our relationship for growth equity investing. And we've partnered up already on a number of investments over the last few years.
There's been a big push out of many funds in the region to invest more domestically. Do you see that drive being accelerated on back of the several months of conflict that we've witnessed here?
I think it's just continuing. I mean, they've always encouraged us to be active in the region.
Yeah.
It's why we really put investment teams on the ground for both growth equity and infrastructure to make investment in the region. That's been strongly encouraged by them. I don't know that I would say it's increased, but it's been maintained, that's for sure.
Yeah.
And they've celebrated some of our investments and encouraged us.
So I want to bring you some comments from the State Street CEO, Ronald Hanley. He made them at Milken last week, and he said he's specifically talking about the Gulf and the realignment of capital flows. And he says there will be investment opportunities, but the point is that on a net basis, the amount of money coming out will certainly be lower. Now, of course, we're coming on the heels of that $500 million commitment to General Atlantic from QIA, but do you think that it's going to become more difficult for Western funds to come to this region and receive capital in the way that they did in the past?
Yeah, I think the incredible things about the $4 trillion in sovereign capital and the sovereign entities that exist here is that they really take the long-term view. They're very sophisticated investors. I don't think they're going to really get blown off course in terms of making new commitments and continue to invest globally. I mean, they've been active on new projects. They've been active on new commitments. Our QIA announcement, I think, is a great example of a very large, very sophisticated investors saying we're going to continue to advance our objectives financially going forward.
Talking about global opportunities, not necessarily specific to the region, but where are you seeing the most attractive growth opportunities right now, and how closely are they aligned to the broader AI theme?
Well, I think you have to start with AI. I mean, AI, probably half the global private capital in the world is being allocated to AI in some way or another, whether it's on the growth equity investing side, whether it's infrastructure, or even private credit. A lot of it is really going into this AI cycle that's continues to accelerate, not decelerate, accelerate. So I think that's theme number one, and it's something that's top of mind for all firms, and people are participating different ways. So that's a critically important theme. I think there's a growing awareness about the importance of diversification and investing globally. I think one thing that would happen when you get a geopolitical event like this, it's a reminder that the one risk management tool we all have is to stay diversified. And we've encouraged, General Atlantic invests about half of our capital in the U.S., half outside the U.S. And we've always tried to offer our clients strong global diversification: Europe, India, China, Southeast Asia, Latin America, and the Middle East. And I think that's going to only become more important as a way of managing risk.
So it is possible to be diversified away from the AI trade. It seems to be inescapable right now.
It surely commands the headlines right now, and maybe for good reason. But I think we can't forget there's so much opportunity globally. There's opportunity in healthcare. There's opportunity in biotech. Consumer, there's still a lot of innovation happening. We have a view that global growth is moving east and south. And so if you look at economies, in Asia, Middle East, these are all growing rapidly, growing faster than global GDP. And that means they're going to consume more. So we see a whole set of opportunities.
Yeah. Just coming back, to what I was saying about AI, you look at some charts, like the semiconductor chart in the U.S., these are public markets. And in the last month, it's almost a vertical rise. And I remember at the beginning of the year, there was a lot of conversation about AI hype and the disruption, the speed of disruption, particularly as it pertains to software as a service. How do you think about the speed at which we're moving and public markets are adjusting to that?
Yeah, it's a remarkable time in so many ways. But I think the thing we've learned in the last 6 months is that demand for AI, the demand for intelligence, is insatiable. If you look at the growth in tokens as a measure of usage, it's growing by orders of magnitude every month. And so if there were any questions about the demand for AI, they've been resolved. I think the question becomes, can the demand be met by sufficient supply? and that means compute and energy. And this whole data center build out and this whole movement in the chip stocks and the demand for chips, it's all about providing supply to meet this very rapid growth in demand. And so chips are going to be essential to it.
Well, that was Bill Ford, General Atlantic Chairman and CEO, speaking to me yesterday. Now, UAE-based AI company Presight has reported first quarter revenue up 22% year on year. The company says national infrastructure and mission-critical platforms remained fully operational during the regional instability. Presight is also maintaining its guidance for the full year. Joining us now is Thomas Pramotedham, CEO of Presight. It's good to have you with us. I'm picking up on your numbers. You've got, a revenue pickup of 22% year on year, profits attributable to owners up 6% year over year. How much of an impact has the geopolitical uncertainty, the conflict, actually had on your core operations?
Well, I think the first quarter has definitely been a challenging quarter for many of us. It's a complex environment. But then again, this is our 13th straight growth quarter.
Yeah.
So the resilience in the business has been built over the years. You've seen that we reported our performer order book up at $4.9 billion dirham itself. That's a testament to, one, the system that were built in the UAE continue to be resilient. Two, the need for sovereign AI and mission-critical systems that impacts not just enterprises, but governments and citizens, that will stay relevant. And I think this is where the growth is coming from, in the UAE and outside the UAE.
Do you think perhaps maybe one of the byproducts of the conflict is even more focus on sovereign AI in the future?
I think definitely.
Really doubling down on some of these initiatives.
It is. I think countries and economies are seeing that for intelligence to be effective and you want to uplift the collective intelligence of a nation, you have to be sovereign.
Yeah.
So our thesis of sovereign AI solutions is key to that. UAE's drive towards sovereign AI infrastructure, the investments made in the country, is a test to that. Now we're using AI across the government sectors. Dubai government has moved towards, the federal government has moved towards 50% agentic services. Mm-hmm. In the same quarter, the Ministry of Foreign Trade appointed Presight to be an AI native platform. And that same breadth and the foresight of leadership has us using AI to optimize global supply chain challenges that is going to come, and that is what we're facing today.
Well, I saw that out of the UAE, there's a plan to transfer 50% of government operations, 50% to AI agents within 2 years. First of all, is there any other country in the world that's doing that?
I think we're definitely a leader in it, and the recent Microsoft AI Diffusion Index had us at the top.
Yeah.
It's not just about numbers and the 50%, it's the pragmatic approach of it. We could have said, let's do 100% and set that goal. But what we're doing is a very calculated and measured way of which we make use of technology like agentic AI, together with how we need to serve the country, the citizens itself. And this blend and this ability to empathize, the need to bring in technology, bring in agentic AI, but still make the human in the loop a relevant piece. I think that's the part that will make us stand out as a leader in adopting the AI.
Yeah, I guess maybe a question for an economist, but I am curious to hear, given, this plan, how much of that is actually going to translate to overall productivity?
I think the productivity is something that we're seeing now. If you recall, in the first quarter, the first month we were in Davos, the federal government launched the first legislative intelligence framework.
Yeah.
This was an AI platform that was built together with Presight to do one thing about better legislation, better drafting, better conflict. The gains you get from drafting a law that will respond to the fast pace of the changes in technology, it's already productivity gain. And you will find all this key efficiency gains across the programs that the government will introduce.
Yeah, something to watch for sure. I want to ask you about your international markets contribution as well. We've spoken about the UAE, and I see from your earnings this quarter, contributed 30% of group revenue. That is up from 22.5%. So clearly you're expanding your international footprint. Where have you seen the biggest interest? Well,
we have conversations through our time together on every earnings that international continue to be a big part of us. We're expecting to finish the about 40% international, 60% UAE. I just came back from Kazakhstan. We reported last year that we won the Smart Astana capital city. It's a urban management platform that is AI powered. We handed that over to the city of Astana. In the same week, we signed with the city of Almaty. So governments are looking at ways that urban management can be powered by AI, transportation, municipality services. And then they look to the UAE. How have we done it? And I think that is really the two drivers that have taken Presight's international business from when we started back in 2023 at 1% now to 40%.
How do you stay ahead of your competition? There are lots of people in the space.
Yeah, I think you have to stay true to the value of what applied intelligence would offer. Like, we spend a lot of time understanding what needs to be achieved, less so what technology we would use. And then a big part of us, that we have a showcase of UAE, who has taken the step and not afraid to fail, to keep testing. Right here, where impossible is possible, we get to test, we get to put it in a crisis, we get to do it at scale. We learn from that, we export that out to the international clients that we talk to. It's a combination of technology and empathizing what the real need is that I think keeps us ahead.
Thomas, thank you so much. Thomas Pramotedham, Presight CEO. Now for a look at some of the other stories we're following today. A wide range of companies are pressing on with plans to list in Saudi Arabia, bolstered by gains in the benchmark since the regional war began. Bloomberg has learned that firms, including a bottling company ultimately controlled by the billionaire Al family and telco Ittihad Salam Telecom, are seeking additional banks to help arrange a potential listing. The deals could help Riyadh Stock Exchange rebound from its quietest start for listings in years. Telecom giant Orange plans to double its solar-powered base across Africa. The Orange CEO told us that the fallout from the Iran war is making the business case even more sustainable.
There's still so much to do in DRC, both to invest in infrastructure, and that's a country where we decided to partner with Vodacom to share next generation of tower mobile site deployment, because it's more efficient to do that, the two of us, because we want to reach rural areas where it doesn't make sense for every one of us to build two sites. And on top of that, we want those sites to be more and more solar powered. And the current crisis in the Middle East with the price of oil is really forcing us and making the business case even more sustainable. So as part of our commitment this week, we're also announcing that we're going to double the number of solar sites in our mobile footprint across the continent.
Coming up, Dubai's ruler tightens control over property giant Emaar in a multi-billion-dollar reshuffle. More details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johanna Bersachi in Dubai. Israeli military says troops have completed a special operation to destroy Hezbollah infrastructure and establish an operational control in Lebanon's Litani River area. Israel's Channel 12 reports that during the operation, troops crossed to the north side of the Litani River. Forces also carried out operations in the river to allow for the passage of heavy and armored vehicles to accommodate future efforts if needed. Kuwait says 4 people it arrested while trying to enter the country via sea have admitted to working for Iran's Islamic Revolutionary Guard Corps, IRGC. State-run Kuna adds that the accused have confessed to being assigned to infiltrate Kuwait's Kharg Island on May the 1st to carry out hostile attacks against the country. Bloomberg has learned that Swedish buyout firm EQT is tapping funding from the Qatari sovereign fund. That's as it prepares to make a binding offer for Volkswagen's large marine engine unit by a deadline next month. VW has asked suitors to submit the next round of offers for Everlance in early June. EQT is bidding in a consortium with the QIA and Porsche Automobile Holding and is competing against rival private equity bidders Bain Capital and CVC Capital Partners. A firm controlled by Dubai's ruler has acquired a more than 20% stake in Emaar Properties. The move comes at a sensitive time for the property market as regional uncertainty begins to weigh on sentiment. For more, we are now joined by Bloomberg Middle East finance reporter Zainab Fatah. Let's talk about this. What does the deal actually mean for Emaar Holdings? I was speaking to the CEO last week.
Yeah. So the timing of the deal is what's important. Moving this stake from one entity to the next is probably not going to weigh so much on the operations of Emaar, but the timing of it means that the government is trying to kind of exert more control, more visibility over all of its real estate assets. We know that Dubai Holding is emerging as the platform by which the government is going to position all of the big state-owned developers. So over the past few years, we saw Nakheel, which built the man-made islands shaped in trees.
Yeah.
And also Maidan, which built the racehorse course, along with other developers that bring a lot of supply into the market into this platform. So now Emaar is the latest addition.
Yeah, and so it takes the total ownership stake to just shy of 30%. I mean,
exactly.
Is this actually going to have an impact on property? Clearly this is coming at a sensitive time for the real estate market in Dubai. I mean, how should we read the knock-on effects to the impact it could have on pricing, for example?
This is expected to give the government a lot more visibility over the real estate market in the city. So they're able to see what Emaar, Maidan, Nakheel, all of these companies are doing, how they need to react in terms of supply and demand to ensure that the market is well balanced and that they control the price movement and somewhat also ensure that the market is actually looked after in a way that allows them to react to certain parts of the market if they need to add more on the affordable side versus other parts of the markets. It just allows for more visibility of the market. We don't expect to see a change in terms of the management of Emaar and other companies. That at least there are no indications that this is where it's headed.
And what other companies does Dubai Holding actually have a stake in, beyond Emaar? Because it's not just Emaar, obviously.
Of course, they have stakes in companies, basically in around. So we basically, as we mentioned, a lot of the developers. Dubai Holding has Nakheel, Maidan, several of the companies that own a lot of the free zones in the country here and in Dubai, like Media City, Internet City, and so on. So basically, there is a lot that the country, that Dubai Holding has control over because it's able to see these free zones, how they're operating, how's the demand in them. In many ways, the operations of the company kind of it holds a lot of these jewels of Dubai that enabled it to kind of diversify away from being an oil city. So hospitality, hotels, so on.
Yeah, and of course real estate there too.
Yeah.
Zainab, thank you so much for bringing us the latest there. A Bloomberg Middle East finance reporter, Zainab Fatah. Okay, let's check in on how markets are faring. A crucial couple of days coming up on the geopolitical front with President Trump heading all the way over to China to meet with Xi Jinping, alongside a whole bunch of American executives as well, too. Earlier, we were reporting that Jensen Huang is also flying over to China, and that gave a bit of a pop to NVIDIA shares when that was confirmed. So S&P futures up 16 basis points, NASDAQ up almost 0.5%. European markets, take a look at the green there, up 0.9%. And once again, we're going to keep a close eye on UK political developments. Can the Prime Minister stay on? That is the big question. That is it for Horizons Middle East and Africa. I'm Johanna Versace in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.